Good morning to all. Subject Financial Accounting 1. I am Vinay Kumar C, Assistant Professor, Department of Commerce, SVS College, Bantwal. This is the problem we are going to discuss now. This is another method of depreciation, that is annuity method. Okay. Under this method, the various journal entries are coming. The first journal entry on purchase of any asset. The journal entry is asset account data to bank account, and also for charging interest. So if you somewhere you are going to put the asset as an investment, so you are going to get the interest. So what is the journal entry? Asset account data to interest account. Again, to conduct a depreciation. So charging depreciation on asset, the journal entry is depreciation account data to asset account. Then a transfer of interest to P&L account. So if you are transferring that interest account, credit interest account should be debited. So interest account data to profit and loss account. Next, for transfer of depreciation. For transfer of depreciation, the journal entry is like this. So depreciation should be accredited. So profit and loss account should be debited. Profit and loss account data to depreciation account. Okay, these are the journal entries coming under annuity method. So let us have this problem towards annuity method. So a firm acquired on lease a property on 1st April 2014 for 5 years at cost of 1 lakh. It is proposed to depreciate the lease by annuity method charging 12% interest. Full stop. Annuity table shows that to depreciate rupee 1 over 5 years of charging 12% interest, a sum of rupee 0.277410 is required. So the lease account for 5 years. Okay. So here in this method, so you are going to have a annuity table for calculation of the depreciation. Anyway, they are directly given the annuity table number. Okay. So note, annual depreciation is equal to, so annuity table number is 0.277410 for 1 rupee. Okay. Multiplied by 1 lakh. So for what cost you are going to buy? For 1 lakh rupee you are going to buy the lease. Okay, you are acquired the lease for 1 lakh rupees. So that's why 0.277410 multiplied by 1 lakh. So 27,741 is a annual depreciation. Okay, this should be considered for a depreciation. So let us have a lease account. So compulsory you need to prepare a lease account in the books of a firm. As usually, date, particulars, amount, date, particulars, amount. Left hand side debit, right hand side credit. So the first journal entry. So purchase of lease. So lease account data to bank account. So left hand side 1 lakh rupees. So again you are going to get the interest for that lease amount. How much you are getting the interest? 12,000. So what is the journal entry? Lease account data to interest account. So left hand side to interest account 12,000. How it is arrived? So 1 lakh multiplied by 12 by 100. Okay, 12,000 is the interest. Come to the point of right hand side. What is the journal entry for depreciation? Depreciation account data to lease account. So by depreciation account 27,741. This is calculated earlier. Okay, that amount should be taken. So left hand side total is greater than right hand side. So that's why deduct 27,741 out of 1,12,000. How much you are getting? 84,259. Okay, that amount should be carried forward to the next year on 1/4/2015. Two balance brought on. How much? 84,259. For again you are going to calculate the interest for that amount. Okay, so 84,259 multiplied by 12 by 100 10,111 is the interest. So 2 interest account, 10,111. Come back to the right hand side. By depreciation account, as usually 27,741 under the annuity method. Okay, so you are going to consider, once you calculate the depreciation, that amount should be taken every year. Okay, next, you are getting the balance carried down, that is 66,629. That amount should be carried forward to the next year. Again you are going to calculate the interest on 66,629 into 12 by 100. So 7,995 is the interest. Again the depreciation is 27,741. So out of 74,624 deduct 27,741, 46,883 is the balance. Okay, that amount will be carried forward to the next year to balance part-1 on 1/4/2017, that is 46,883. For 46,883 the interest is 5,626. Okay, and that year the depreciation is same as it is, that is 27,741. So next, move on to the next page. So out of 52,509, deduct the remaining expenditure, you are going to get the 27,688. That amount will be carried forward to the next year on 1/4/2018, that is to balance brought down 24,768. For that the interest is 2,973. How you are going to get that interest? 24,768 multiplied by 12 by 100. So you are getting 2,973. For that year the depreciation is, by depreciation account, 27,741. So one changes under this method, that is the final year ledger should be tallied to the left hand side to the right hand side. Okay, both the side should be tallied. So 27,741, 20,741 is the gross total for the year 31/3/2019. Okay, anyway we are done this problem based on annuity method. So especially for the purpose of examination, I told that the first two methods are very very important. So original cost method and diminishing balance method will be asked in the examination. So anyway we are going to do all the 4 methods, but we need to give more importance to the first 2 methods. Okay, thank you for watching. Hope you are all are learned.